Join me in welcoming Peter to come up and talk about the investment market here in Brisbane. Talk about other things too.
Yeah,
Thanks,
good
Peter.
morning.
Good morning. Okay, now Peter, how are you seeing it? You're really the man in the hot seat at the moment. All of Australia wants to talk to you about the Woolworths portfolio. There's, I'm sure that's a focus of your working life at the moment. Yeah, look, how are you seeing the capital markets and the interest in retail at the moment?
There's a very high level of interest in the retail market at the moment. It's been a pretty sad and sorry year, 2010, for retail investment sales. There's been very little throughput, and it's a sector that certainly needed a quantum shift in the dynamics to really get things moving. And I think the Woolworths portfolio, roughly $900 million worth of product on the market at any one time from one vendor, has really provided that to the market. So it's for the retail investment market, the Woolworths portfolio is certainly a game changer.
Yep. So let's drill into that as far as we can. I know you're in the middle of the process right now, so there's probably things you can't say. But give us an idea about the level of demand for that portfolio and where it's coming from.
There's been a really overwhelming level of demand. We've seen demand come from international buyers, which probably surprised us a little bit. The currency rate will certainly have some impact on that as the hedging risk sort of takes hold. The institutional level, obviously there's a high level of the players in the market that can consume a large portfolio of property. So we've got some domestic institutional interest. And obviously supporting that, there's an enormous volume of private investors who are looking for quality retail investment product. And obviously with a 20 to 30 year Woolworths covenant sitting behind these centres, it's getting great support from the privates. Woolworths' intent is to sell the portfolio in one line, and that's their primary pursuit. But what we're seeing emerging is that the institutional buyers might look at the sub-regional product, they might look at state-based product, and then sort of sitting below that are the private investors, of which we've got a really strong interest in the product, obviously as a flight to quality. It's very interesting to hear what Bill and what Ed said about the industrial sector and the office sector, that I really think that there's an emergence in this current market, while the opportunity is there and while the economy is sort of in a recovery phase, that there's going to be a flight to value and a flight to quality, and that's where we'll see these markets move.
Do you think this portfolio will cause a rise in values for the market generally?
I think what it'll provide, and I don't know if we can go back to a slide where you were talking about sort of new development. I think you'll see in that in 2007 was the last time we saw sub-regional stock being constructed. There's been no decent sub-regional stock on the market, no transactions taking place. So this portfolio, 34 properties, 9 of which are sub-regional properties and 25 neighbourhood centres. I think what we'll see is some evidence in the sub-regional sector, which there hasn't been before. And for the valuers amongst us, there's really been an absence of that evidence. So in order to get valuations that obviously drive and motivate finance, we'll see those yields getting down to the 7.5%, 7.25% level, and that will liberate some projects and actually get us going again.
What's the timing on that portfolio? When do you hope to close?
We've been in the market on the portfolio for about 3 weeks now. We closed the first stage 1 expressions of interest on the 12th of November. We'll then move into a stage 2 process where there'll be a short listing of either single institutions or groups of portfolio buyers or privates, and then we'll move through to probably settle those sales in before Easter 2011.
Okay, great. Let's turn now to the CBD market, a very popular one in Brisbane. How are you seeing the leasing in and around the Queen Street Mall at the moment?
Queen Street Mall's been a relatively active sector. CBRE have enjoyed a dominance of the CBD leasing market traditionally now for sort of 15 or 20 years, and now that's in the capable hands of Michael Hanscom. We've seen a lot of churn in the tenants in there. Food is very, very strong in the Queen Street Mall and really strong in all leasing sectors. We've seen some great movement there. There's been a period of good activity. I think nothing better demonstrated by the result that Michael achieved a VALAD at the top of the mall, where there were 6 tenancies there, and from traditional longer term tenants that have been there, they saw a 30 to a 50% increase in rents there just by repositioning that product and liberating six tenancies at once.
Okay. What about bulky goods? Finally, bulky goods is a very popular sector in Queensland, obviously with the strength of the housing sector. How do you see it faring in the leasing and investment side at the moment?
Bulky goods is an interesting sector. Obviously, the population growth and the net migration into Queensland has dramatically affected that. So the demand there for projects has fallen away almost totally, and we see probably only one or two small projects underway. What that's created is created pressure on the existing space. For those people who've got existing centres, it's created an opportunity to remix those centres and to actually calibrate the rentals up a little bit. So I think that it's a real sector of opportunity. On the investment front in bulky goods, I think again there is that ability to reposition some of the product and to see that there's some value lift in that. So I see it as being a good sector. It's great value for money. That, in my view, the bulky goods sector. You sit there with tenancy schedules dominated by national traders, and you're getting returns that are in that 9 to 9.5% range. So I think it's a really exciting sector and probably got a good future. I think it's great value buying at the moment.
Good counter-cyclical play.
Yeah, I think so. They're good fundamental investments.
Okay. Any sort of parting thoughts, words of wisdom for the year ahead for 2011?
I think probably what we'll see is a number of these big transactions take place, and there's Woolworths have got a massive portfolio on. Charter Hall have also got a portfolio of shopping centres on. So what we'll see is that there'll be a liberated. I've said liberated about 4 times now. There'll be a decent quality of stock on the market, and we'll see that sort of provide some evidence of sales that will actually drive some more transactions. The leasing market is strong. We'll see again that'll be held by the high ground will be held by food. Bulky goods I think is a great sector. So I think as the guys were saying before, it's a flight to quality in terms of take the opportunity in 2010, 2011. Buy a great property at a great price, and it'll stand you in good stead for 2015 to 17, where we'll get some yield compression and have some fun.
Okay. All right. Well, I might liberate you now, Peter.
Thank you.
Go. Thanks for that. Please join me in thanking Peter.